Hey, my name's James Nicholson and welcome to my YouTube channel. Now, I want to change my market predictions for 2023 because of the interest rate rises and also what I've seen going on in the market. So do make sure you stick around to the end and let me know your opinion in the comments. Now, this channel is all about my investing journey. We're currently on a investment journey to build my portfolio and one for my two girls, Georgia and Amelie. We got them 2 properties last year, one in Doncaster, one in Dorking in Surrey. You can see all of that on the channel, so do go and check out those deals. And do subscribe to the channel and hit the bell while you're here, because I want to make sure you don't miss anything. This is going to be a very interesting year in property for sure. So, what is going on in the market? Well, look, interest rates have gone up, and when we had the mini budget, it was awful, and we were expecting the base rate to go to 6.5%, which was really, really worrying for a lot of people, because that means that you would probably pay 8.5% to 9% if you were borrowing. Not a great situation to be in by any means. And so that is something that spooked the market, and really that mini budget didn't really work out very well. Since then, we've had a new Prime Minister, Rishi Sunak, and now the rates initially got revised down to the forecast of the base rate going to 4.5%, and now it's gone to 4.25. Now, what we're seeing with a lot of mortgage companies already is they've already priced that 4.25 into their mortgage products for now. In fact, in December and even in January, some mortgage products, even though they know rate rises are on the way, have dropped because they're trying to stimulate some sales and some business, because if they don't lend, they don't make any money. So I think that mortgage rates, base rate is going to go up, but your mortgage rates will stay the same. So I think you're not going to see that much change in the rate that you can get from a lender throughout this year. And that's kind of good, because we want some predictability, right? So that's a very, very good thing. If we can get some predictability, great. Now, inflation data came out either this morning or late last night, and inflation has dropped again, which is also a positive thing, but not much. I think it went from 10.7% to 10.5%. Barely anything. It's going down a lot faster in America. Now, there's always going to be a lag on that stuff, because there are energy price drops. Gas and oil have started to come down, but we don't get that price for 6 months. So by the summer, we'll start seeing that. That's the problem when the gas and electric companies buy so far in the future. And so that's a good thing. Inflation is starting to come down, but not quite fast enough, is it? It needs to get that a little bit faster. I mean, we want 2% inflation, but if we could just get to 5% by the summer, that would make a really big difference to a lot of people, which would be a very, very positive thing. So inflation is still kicking around. Now, we are expecting prices on houses to go down, and we've had 2 or 3 consecutive months now where prices did drop. I think it was 3 actually, and the prices have gone down. And so last year, house prices ended up being positive on the whole, but it was a lot less. It could have been at the beginning of the year, the house prices went crazy, and then we had a big drop off at the end of the year. Now, I think that this year, house prices are going to drop around 8%. Now, there's a lot of crazy headlines out there that say the market's going to drop 45%, the market's going to drop 50%, and it really does depend on area, right? So certain areas, the price obviously will go down more than others, and I totally agree with that. Now, I think that this price reduction or price drop is going to take longer than a lot of people expect, and here's why. So this week we had data from Rightmove, and it said that the asking prices for houses has gone up. It went up around £3,000 on average per house. Now, that's not sold prices, it's the asking price. Just for clarity there, because I know when I made a video talking about that, everyone was saying, hey, house prices haven't gone up. I'm not saying the house prices have gone up. I'm saying the asking prices have gone up. Now, what that shows me and shows us is that people aren't ready yet to give huge reductions in their property. And if they're not, then the market isn't going to shift downwards as fast as you might expect. It's going to take that little bit longer. The fact that this month, in January, at the time of recording this, the prices have gone up as the asking, means that we're not going to have some huge drop with the property deals that are done in January, February and March. And that data is going to come through at the end of the year. Now, we might have some more drops from deals that were agreed last year, but I think that the whole year, we're going to roughly average around 8%. Now, that's okay. I don't think that's particularly worrisome for a lot of people, because in a good year, a couple of years after that, we'll hopefully have recovered that kind of stuff. So that's a positive thing, isn't it? So what else is going on in the market? Well, like I said, there isn't that urgency from people to sell at the moment. What's different between now and 2008 is the fact that you can still get mortgages. We've just had the government have just come out and said the mortgage guarantee scheme has been extended. So that's something to consider as well. And that is basically helping first time buyers, which is good. So that's going to get some more people back into the market that stopped because they were like, oh, I wanted to do that scheme. It stopped. It's come back. So that's good. And that's going to help some first-time buyers. That means that the banks are more likely to lend to them because it's kind of insured by the government, these deals. And that's a positive thing. That's going to give some more stability, and the government is pushing that in there. We've got a slight reduction in stamp duty still as well. That's going to help people because affordability is harder, and a lot of people are saying in the comments that, look, affordability is not as good as it was a year ago, 100%, but stamp duty is slightly better than it was, and so that helps as well. So they've got that extra little bit of cash that they can use as a deposit. Now, if the market does drop 8%, that's fine. Now, you can buy good property deals in a rising or a falling market. You've just got to get good at finding below market value deals. I'm looking at auctions at the moment, and I'm seeing prices are 20-30% down on last year. So that's more than that 8%. So if you bought there, someone that needed to be renovated, you added some value through that renovation, you can protect yourself by creating 20-25% equity by buying below market value and adding value, double-pronged strategy there. If you do that, then don't worry about what's going on so much in the market. If you buy good deals, keep focusing on that, because the serious investors that are really going to be doing well in this market, they're not massively worried about this stuff. The fact that we've got more predictability with the interest rates is good. And that means that you can kind of plan deals now. Last year, where we've seen these house price falls and stuff like that, there wasn't that predictability. The mortgages weren't available for a few weeks as well. That meant there was a real glut in the market. People are forgetting that. You couldn't get a mortgage for 2 weeks to 4 weeks. So that meant that there were less buyers at that time, and some people would have reduced their price to try and get sold. Now you can get loans. Now you can get mortgages. Now there is like more positivity on the horizon. We've just avoided a recession as well. And now we're not going to not go into a recession. I think it's quite likely that we will. But we did avoid that recession initially. We've kicked it down the road that little bit more, which is a good thing for us as a UK economy as well. So look, I think prices are going to go down. I think that it's going to be just later in the year than we were expecting because the sellers are not desperate. That's in summary what I think. They're not quite desperate enough to see that. How that will change is if they see interest rates continuing to rise, those 2 more interest rate rises that we're expecting this year, and if they're in the market for 6, 8, 10 weeks and they're not getting viewings. Then they're going to have to move the price down or just take it off the market and wait. That's what's going to really, really move this market upwards or downwards or sideways or whatever happens. But what do you think about all of this? Do comment below. Keep it kind. Do subscribe, hit the bell. Do like the video as well. That really helps me with YouTube. And go and check in the content. There's a link where you can now get registered to get some training as well. This is a very big opportunity in property right now. And I'd love to invite you along to come and have some training and really understand how you can be a property investor. So click on the link and fill in the details below. Check out all the other content on my channel, including this video right here. Bye for now.